Remember to like and subscribe this video if you want to see more. Obviously, wild week this week in AMC. So what we're looking at right now is just the overall page here. AMC, we've grown here to 4.5 billion in market cap. We were at 700 million a few days ago, about a week ago. Short interest was in the 50s. We're now down to 42%. That's as of 115. It's about 2 weeks ago. So I would imagine that's come down even more, maybe, right? I think some of the shorts coming out are actually being replaced with new shorts. Now I want to work my way through the charts here. So if we work down through the charts, you can see what happened here. It's kind of a sad situation, honestly. We were rallying strong off my earlier calls. You can see the volume growing. We have a massive day here where we had this 200 and some percent spike. And then this downward trend here that I've circled with the lower volume. What happened there is Robinhood and a bunch of other brokerages limited the AMC to only sells, no buy orders. So obviously stock's going to go down. Nobody can buy it. The price can't go up. It can only go down. So it was an artificial sell-off. Honestly, it was pretty ridiculous. I think there'll be many lawsuits to come from it. Insanity. Never seen anything like that. You can see the volume decreased heavily because, again, can't buy. So, of course, the volume is going to go down drastically. Day after, we did get a little bit of a pop. That's a little bit of a bounce. Now, I don't know how much enthusiasm was taken out of this name. The day after, we actually did make it to 16. This is your 1326 here. That's where it closed. But the day after, we did make it to 16. But we have pulled back the RSI into something a little more reasonable, which could allow for a bigger rally. Let me get the next chart here. So a lot going on in this chart, lot circled here. But now I've zoomed out to these 5 days. These are 5 very important days. So this is that early rally, and then whoop, you see the 200% spike, high RSI there, and the climb. Okay, we had a nice climb. This big, bold line that I tried to draw here, it's right in the 13, 14, 15 range. That's the really strong support and resistance. You can see about half the time's been over, half the time's been under, and then this rebound day kind of right in the middle. You can see some resistance here bouncing off this 12 and this lower resistance line. And then you can see here it popped up to 16 like I mentioned and came back down. That 15, 16 is going to be tough to break through, and let me show you why. So if we zoom out even further, this is a 5-year chart. Sorry, we just went from 5 days to 5 years. If you zoom out, you can see we're right here. 1326 had a nice spike, big old volume trend, way more than any before, making all the other volumes seem kind of meaningless back here or inconsequential. You can see the old peak is 35, then a 20 peak, and then we're down that 13. Now let me show you right here. I didn't circle this, but right in here, you can see all that 15, 16 consolidation. And anytime you have that consolidation, that's going to turn into resistance on the way up, which is what you're dealing with right now. That old recent high was the resistance, and I honestly think we would have rallied the whole way to 35 were it not for the artificial restrictions. But now we're kind of sitting here. And honestly, guys, if I just flip back, I'm not sure exactly what's going to happen here because it's kind of out of our control. If Robinhood would allow full trading in a free market, and Webbull and these other trading platforms, I would assume we'd move much higher, as we've seen a lot of mentions on Wall Street Bets. And I think we'd see a continued rally. I think we'd see the volume grow. But it's quite a question now. This dip provided a chance for the shorts to cover. It's going to be pretty hairy out there. So I think there's still a reopening play here that can be had. You could see the stock get back to 20 just on reopening and having money, cash flow and whatnot again now that they've secured funding. I also think it's important to note that if you're in this name and you've made some big money here, the best thing to do if you want to help the rally is obviously to buy more. But if you're not comfortable buying more, what you should do for yourself is set a stop loss so that you can feel like at least you set a floor for yourself. That'll give you some confidence, allow you to sleep a little bit at night, and God willing, allow you to buy more. So I'd set a stop loss somewhere around that $10-11 mark. We had some strong resistance in that $10-11 mark on this chart. You can see that right here. So 10, 11, maybe 12, but you're going to break below 12. So 11.50, you can set a stop loss in there. I myself put in a buy order anywhere below 10. I think we go below 10. I'm comfortable buying it because I think it's about 50% downside risk with about 100 to 200% upside. I'm happy with that ratio. So again, like and subscribe. Post your questions below. Thanks, guys. Good luck.